This is an Uncovered Japan Company research report on Japan Engine Corporation, ticker 6016. It is Japan's only owner of a large, low-speed two-stroke marine engine brand, and it is building an unusual, clean fuel growth story. The headline numbers frame both sides of the case. FY26 operating margin was 18.4%. Order backlog reached 34.5 billion yen, and return on equity was 25.9%. At a forward PE of 14.4 times, earnings look reasonable, but the high price-to-book multiple means investors are already paying for durable returns. Japan Engine makes the enormous low-speed main engines at the heart of ocean-going ships. More importantly, it owns the UE design brand. There are only 3 low-speed two-stroke brand holders worldwide, and Japan Engine is the only Japanese one. That lets it manufacture engines itself, while also earning parts and royalty income from licensees. The financial record has changed sharply. Revenue grew from 11.6 billion yen in FY21 to 29.7 billion yen in FY26. Operating profit rose from 0.4 billion to 5.5 billion yen, lifting operating margin from 3.6% to 18.4%. Higher utilization, better mix, and a growing service and licensing contribution all mattered. The mix is the key. New-build engines generated 48% of FY26 sales, while repair, parts, and licensing generated 52% and grew 28.6%. New-build sales temporarily fell as factory time went to first-of-kind clean fuel engines, yet the new-build backlog still reached 26.7 billion yen. The combined 34.5 billion yen backlog gives unusually long visibility for capital goods. Free cash flow turned slightly negative in FY26, but the report attributes that to deliberate growth investment rather than a collapse in earnings. Capital spending was 2.8 billion yen, as Japan Engine invests in a 19.9 billion yen factory. That makes future cash conversion an important checkpoint. The fresh part of the moat is clean fuel engineering. Japan Engine delivered a world-first commercial ammonia main engine in August 2025, then completed the world's first land-based run of a large ship hydrogen engine in March 2026. It is also developing methanol and high-efficiency heavy oil engines, so the company is not betting on one fuel alone. Licensing improves the quality of this manufacturing business. Every UE engine built by a licensee can create future parts and royalty revenue. But the model has a double edge. Guangzhou Diesel, the Chinese licensee, was 14.5% of fiscal year 2026 sales. Its growth helps today, while its potential independence is a long-term competitive risk to monitor. Management's long-term ambition is 50 billion yen of revenue and 10 billion yen of ordinary profit. The practical enabler is the new factory, planned to begin operating in FY 2028 and add about 1.5 times production capacity. The target is an ambition, not a forecast, so execution on capacity and order conversion will decide its credibility. Valuation is a genuine tug-of-war. The forward PE of 14.4 times sits below transport equipment and machinery sector averages, but the price-to-book ratio of 3.92 times is roughly 3.6 times the transport equipment sector average. Strong returns justify some premium. The question is whether clean fuel growth can keep those returns durable. The report's 3-year scenario analysis is deliberately wide. Its author estimates a FY29 bear case of 4,849 yen, base case of 9,860 yen, and bull case of 18,902 yen, against an 8,600 yen reference price. These are not targets or recommendations. They emphasize that the stock's cyclicality, theme sensitivity, and execution risk can matter as much as business quality. Japan Engine combines a rare domestic engine license, a growing service and royalty base, and credible clean fuel engineering milestones. The counterweight is a price that already recognizes much of that quality, alongside shipbuilding cyclicality and licensee risk. The practical checklist is backlog conversion, clean fuel deliveries, factory progress, cash conversion, and the evolving licensee relationship. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.